Hello, this is Greg Michalowski, and this is a Forex commentary for FXStreet for Tuesday, October 12th, 2010. And it's about the FOMC today. Of course, we do have the FOMC coming out today at 2 p.m. this afternoon in New York time, and we know that the Fed was worried about their mandate about inflation and employment, and this has led to the expectation that they're going to have additional QE at the November meeting. Okay, it's all known. So what is not known is what will happen today when the minutes of the meeting come out in more detail of what they actually discussed at that meeting is presented to the market. What will the market react to? What will the market do at that time? Will the market have already priced in the move that we've seen? Now, if we go back in time and we take a look at when the FOMC minutes came out, and it was on this day on September 21st, and this low came in at the 131.06 level. The high came in at 132.83, and the market was moved up all the way up to the 140.28 level just last week, and that has been the high. So that's a pretty good move to the upside. Now the question is, on the second time around, on the second piece of news, does the market have the oomph to get back higher? And one of the things that may be restraining the market is the fact that we move below this trend line, we move below the 100-hour moving average. That's this blue line here that's starting to go sideways here. That 100-hour moving average currently comes in at 139.12. Go back in time and look at the last time the market was closed below the 100-hour moving average, and you have to go to this point right here, where we had four bars when the market the market closed below that 100-bar moving average. I'll zoom in here and show you if I can find it. Right here, this bar closed below it, this bar closed below it, 3 and 4, and then by the fifth bar the market was back above that 100-hour moving average and moved high. So it was only 4 hours going all the way back to September 13th where the market was below the 100-hour moving average. So the break below this line is significant. That's why we saw the move to the downside. Went below the 200-hour moving average. This is my confirming moving average. This confirms the bearish bias. But when the market could not sustain any move to the upside, the market started to move back above this line during the last 3 or 4 hours. We're seeing the corrective move to the upside here. So the market is saying, okay, we're going to wait until the FOMC decision this afternoon and decide what we're going to do. Are we going to go higher? We're going to go lower. The key levels to watch are going to be this 100-hour moving average and this 200-hour moving average. I believe that if the market should move below this line again, we should move lower. If we move above this line, we should move higher. And if we stay in between these two lines, it's saying the market is still waiting to figure out what it wants to do, how it wants to do it. So look for sellers against the upside resistance here on any sort of reactionary move off the comments from the FOMC, and look for buyers against the original 200-hour moving average. If it breaks through that level, look for sellers. If it breaks above, look for buyers. That's it. This is Greg Michalowski with a Forex commentary for FXStreet for Tuesday, October 12th, 2010.